Hi everyone, and welcome to my very first Bitcoin update here on YouTube. My name is Marcus and I'm an Elliott Wave trader and founder of HLM Strategy. Before we dive in today, let me quickly introduce what you can expect from this channel here. I started with HLM last year on Telegram, where I provided my trading ideas, also called signals. And then I extended my content to Instagram. You find my profile in the description down below. And now I got some questions from my community where I thought, okay, it makes sense to start with YouTube because it's way much easier to dive into details. And at the same time, I thought, okay, this channel should not just be about trading signals and market analysis. I want to provide some educational content as well. Yeah, my goal is to help you to understand the logic behind the markets and to build up or to improve your mindset and build up sustainable trading skills. What else to say? Yeah. It doesn't matter whether you're a beginner or advanced level. If you're serious about learning how trading really works, you're in the right place. So I would say let's start and dive into the waves. For today, I have the all-time history chart here. Currently, there are no Elliott waves here. I will come to that point later on. And yeah, because I want to point out some interesting structures here on the macro levels. And yeah, I would start here in 2011 because the structure before that time was pretty much a mess. And what I found really interesting here is when we measure the length of each cycle, let's call it bull cycle in green and the bear market or corrective phases in red. I measured the length of each cycle. And when we start here in 2011, the first cycle took 106 weeks. So each bar or candle represents 1 week. And then we had a bear market of 58 weeks. Followed by a bull market again of 152 weeks. And then it's getting interesting because the corrective phase afterwards took 52 weeks. And we can identify that's pretty much the same length as the previous bear market. And again, after that time, it gets really interesting because the next bull run took pretty much the same length as the previous bull cycle, exactly 152 weeks again. And after that time, we got again a bear market, and this bear market took exactly the same time as the previous bear market, 52 weeks. And then we got the current phase or bull market, and the question is now, did we chop here in October? If yes, that means we got again 152 weeks of a bull market. And yeah, I thought that's really interesting. And I got the question from my community, did we really chop here in October? What else can we get at from the data point of view? And I thought, okay, let's make a YouTube video, and I will point that out because we can measure or we can use some different metrics here or indicators. And yeah, the question is now, do we really enter the bear market here? Because that would mean if we say, yes, we are in the bear market and we topped here in October, and if history repeats itself, then we can assume that the current bear market will pointing towards the first week of October. That means we will ride the low here in the first week of October 2026, as in previous cycles. You can see that here, you can see it here, and you can see it here, because each phase took pretty much the same length. And yeah, I thought that's really interesting. But what else can we use now to identify if we are in a current, if we are in a corrective phase, or if maybe we can get another high? And for that, I would use the moving averages, because what's also really interesting from the moving averages point of view is when we use or check the 50-week moving average. Okay, the what you see here is the 20-week moving average in yellow, the 50-week moving average in white, and the red represents the 200-week moving average. And some of you may know this chart, but anyway, I want to point it out again here. When we check here the white line, the 50-week moving average, each time Bitcoin is closing below this level here, we got a first signal that we are entering the bear market or corrective phase. So I'm not talking about this shadows here. I want to point out that we need a clear close below that line, like a candle here. And we find this same structure right here in the next cycle. So not the shadows right there. I mean, a really crystal clear close below the white line. This is this candle. That was the first signal, and then we broke down. And we have the same structure right here in the next cycle from 2022. And there you can see it. We got a close below the white line, and then we entered the bear market right there. And the actual confirmation that we really entered the bear market was here. Here's not really clear, but a test from below, and then the crossover of the white or the yellow line to the crossover of the 20-week moving average to the 50-week moving average. Here's it a little bit clearer. We closed below, got the test from below, got the crossover here, and that was actually then the confirmation that we entered the bear market. So as a first signal, I would interpret the weekly close below the white line. And the confirmation was the crossover of the 20-week moving average below the 50-week moving average. And we got the same structure right here. So that was a weekly close below the 50-week moving average. And then we got the crossover, also called the test from below, and the crossover of the 20-week moving average and the 50-week moving average. And if we check now the current structure, it's really interesting that we see the same behavior. And as you can see here, we got in November 2025 a weekly close. So first signal, okay, we could enter a bear market. Then we got the test from below and the crossover here of the 20-week moving average and 50-week moving average. And now we are on the way down. And the question is, or was from my community, are we in a bear market or corrective phase? I mean, we are clearly in a corrective phase. And if history repeats, and we see the historical data here with the moving averages, and put also the length of each cycle here into consideration from previous cycles, then we could argue, yes, we are currently in a corrective phase. And if we now assume that each cycle has the same length, then it could make sense to try or to use the information from our previous cycle, because that would point out to the first week of October. We may ride our low in October, because the question was, okay, when should I buy? Is Bitcoin cheap right now? I mean, that also depends from your risk management, or what risk management you have, what's your trading plan, and how you want to invest your money. Because from a point of view, if you're investing in Bitcoin and you say, okay, I will hold it for 10 years and I assume it will be $1 million, then the current price can be a cheap price. If you say, okay, I just want to hold it a few months and want to trade it, then the current price may be a little bit high. But anyway, I thought that's really interesting. And there are some other metrics or views where we can identify if Bitcoin is in a cheap level, or where we could say, okay, maybe it's coming lower. And that's when I will put off the 20-week moving average and the 50-week moving average, because this is also really interesting. When we check the 200-week moving average in terms of cheap prices, or price levels where we could enter. As you can see now here, the red line is the 200-week moving average, and in the history or in previous cycles, we can identify each time when Bitcoin is breaking below this level here. Bitcoin doesn't remain for a long time below the 200-week moving average, and then it's shooting up again. As you can see here, it's below that level, shoots up, then quickly retesting the levels below and shooting up again. And we see the same behavior in the cycles afterwards. And as you can see here, it shoots up, coming back again, going below, and shoots up again, back again. And what's also really interesting here, okay, here that time here was the longest time where Bitcoin remains below the 200-week moving average. But anyway, it shooted back up. And what's really interesting here is every time Bitcoin went below this level and went back up, went below this level, it never went back to the level from previous markets. Like here, shoots up, coming down below, but never went back to this level here. So now we can assume if Bitcoin is currently above the 200-week moving average and we entered a corrective phase, we may see Bitcoin below this level pretty soon. And if history repeats here again, when Bitcoin enters this zone below the 200-week moving average, Bitcoin will not stay for a long time below that level and will shoot up again and will probably never come back to this level. Or the chances are pretty high that we never come back to this level. So yes, this is my view from the moving averages and the similarities in each cycle. I think that's some information you can use to identify the current price level, or to interpret the current price level, because a lot of people they ask now, oh, okay, Bitcoin it almost dropped 50%. This should be a cheap price. I mean, when you see this data, you have to decide for yourself if that is a cheap price for you. But from a data point of view, I think we could see definitely some cheaper prices, especially when we see the data in terms of the 200-week moving average. I think we have a high chance that we break below. So, and when it comes to the Elliott waves now, my current view on the macro level is that if we can count this year as a structure or as a wave, I will count this year as a wave 1. It's not really clear if it's a 3-wave structure or 5-wave structure. A wave 1 can be a 3-wave structure or a 5-wave structure. but I will count this here as a wave 1. So we have a wave 1 in white, wave 2, then a wave 3, and that's, yeah, in my opinion, either it's in a 5-wave structure. So we have here a wave 1 in orange, wave 2 in orange, wave 3, then a wave 4 and a wave 5. Or we can count this here, but that would mean the wave 1 is in 3 waves as well. That we have in yellow a wave A, a wave B, and then a wave C. But we're ending up in the same structure that we have here 1, 2, 3. And then we get the wave 4 right here in white. And now we get in terms, if we have a 5-wave structure, then we have here the 1, 2, 3, 4, and now we have completed the wave 5 in orange, and the bigger wave 5 in white. So that would mean we have end up in a bigger cycle, and we get a major drop right now. In a 3-wave structure where the wave 1 and 3 were in 3 waves would mean that we have here a 3-wave structure as well, but that doesn't change the view that we have completed here a bigger wave count, and we are coming down now in a wave 2, a bigger wave 2, because after 5 waves, we have an overall bigger wave 1 probably here, or have completed a major cycle. I mean, some Elliott wave traders have the same view, and I'm also convinced of this count here because it makes sense. And the question is now, I saw that on some other analysts, and they are still waiting here or have the view that we probably can hold a wave 4 support. But in my opinion, it's really hard to argue that this is still a wave 4, especially when we compare the lengths here of wave 2 with this structure, because that would mean we have an A wave overshooting B wave and coming down now in C. And the length of wave 4 would be really extended, because this all would mean we have here a wave 4. And the wave 4 is, most of the times, has the same length as wave 2. And so it would make sense, more sense, when we compare the lengths here of wave 2 with the lengths here of wave 4, that we already got the wave 4 here. And what else can we say? I mean, if we argue that this here is still wave 3, or this is wave 3 and this is A, B, C, I mean, if I say this here is completely or still wave 3, then I can take the Fibonacci retracement tool, put it here on the low of wave 2, and put it to the top of wave 3, potentially wave 3, so this one. Then is the key support for the current wave 4 here at 56,230. Yeah, I think that's really speculative. I assume, especially when we saw the historical data, where we see the similarities in the overall or all-time history chart here, and see that we might have topped here in October, and we also got the crossover on the moving averages. I mean, we have 2 signals, or at least 3 signals. On the one hand, we have here the lengths where this is probably the third time that we ended up after 152 weeks. Then we got the crossover of the 50-week moving average, and additionally the crossover of the 20-week moving average to the 50-week moving average, and now coming down in a corrective behavior. I mean, yeah, the arguments are, or the probabilities are very high that we already saw a top in wave 5 here, and that the wave 4 was here. We get a confirmation actually only when we break below the 56,230, because that's a key support if we measure the length here from wave 2 to the high here of the potential, or potential wave 3. But in Elliott waves, it's all about identifying the most probable scenario. And for me, it's the most probable scenario that we have finished here the wave 5, or the bigger wave 5, and we already saw the wave 4. And in Elliott waves, we assume after 5 waves, we expect a 3-wave structure afterwards. And currently, as you can see, it's a clear 3-wave structure to the downside. So that's a corrective wave count. And when we dive into the micro counts here, as you saw, we have a yellow and ABC structure. This is this one here. And we're coming now down to the key support of the potential wave 4 at 56,000. Yeah, here at around 56,000. But what I already have on the chart is the potential 5-wave down. If we get 5 waves down, then we expect a corrective 3-wave structure to the upside, followed again by a corrective structure to the downside. But as long we hold 3 waves to the downside, we can expect an upside momentum. All right, if we assume that we have already topped here in a wave 5, then we can assume that we get a 3-wave structure to the downside in ABC, labeled here in yellow. And I mean, as long we hold this level here, the 5th wave has a chance, but as already mentioned, this is really speculative, especially when we see here the crossovers on our on the moving averages and the similarities in terms of the length of our each cycle. Then we can expect actually a larger pullback right now. And as you can see here, I would really love to see that the price is breaking below the 200-week moving average. And yeah, I mean, what's also important to say is you see this candle here, the shadows here. Most of the time they will get bought off, so the price is coming back to these levels. Yeah, and most of the times the price is coming back to these shadows here and will buy it off. And yeah, this would be in line with our current view that we either get the 3-wave ABC in a larger A wave, then coming up to a larger B wave, and then coming down in a C wave. Or we get something like this, 1, 2, 3, 4, 5 in a larger A, or 1, and then A, B, C in B in a wave 2, and coming down in C or 3. But either way, my preferred scenario is that we get here a larger A wave, either way in 3 waves or in 5 waves, and then coming back in a B wave and coming down in a C wave. That would be in line with our current view that we will bottom probably this year in October. And yeah, if we jump into the micro count here, then I have already labeled here the both scenarios. My preferred scenario in yellow, A wave, B wave, and now the C wave, where we already have fulfilled wave 1, 2, 3, currently in wave 4, and get now a final wave 5 in yellow. And when we jump on the 4-hour, I can jump into the current structure here. Whoa. And there we have, yeah, here our wave 1 of C, wave 2 of C, wave 3 of C. And now we here in wave 4, which is an A wave. Then we have the B wave as an ABC, A, B, C. And now we will probably get one more push to the upside, and we'll test the resistance of wave 4. So ideally, we hold below the 37,806. If we break above, then we could say, okay, this could be could also be a wave 1 or a larger A wave. So something like this, 1, A, B, C, and 2. But then we have to hold this support here. And then we get a third wave, and wave 4, 5. That would mean if we break above this level in 5 waves that we might have bottomed already. But currently the view is, as long as we stay below the 73,806, that this is a wave. We have now the B wave and coming now in the final push to the C wave and testing the level here. And then we get the final wave, fifth wave in yellow to the downside. And from there on, we have to check level by level how the price is reacting here. If we fulfill here the ideal target for wave 3, then this opens the door for the alternative scenario. But currently, the outlook is that we get that we bottom here in a larger A wave, yellow A wave, and then we get a larger B wave to the upside, probably here into the summer and get, or into early summer, and then coming down in to the through the summer season and bottom in October. But as I said, we take it level by level. And yeah, that is my Bitcoin view here. And yeah, please write your feedback in the comments, and check also the description down below. I have a Telegram channel as well with the membership, and currently we have 90 days for free, so you can check it out down below. And I have also my Instagram channel in the description. So, and I will keep you updated. Click the subscribe button to get informed, and see you next time. Bye bye.